You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the OptionsInsider.com and co-hosts, Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody. That music means it is time once again to kick off our broadcast week here on the old Options Insider Radio Network. What better way to do that than with the old OB, a.k.a. the Option Block, a.k.a. your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the Options Insider Radio Network. Pleased to see you guys with us here. Hope you guys are enjoying the slew of content that is hitting you guys throughout the week here on the network. Usually multiple shows a day. Remember, if you like what you hear for this or any show we do, keep those reviews coming. It really does help all the legion of new folks who are swarming the market these days. Most of them buying Tesla. Maybe a lot of them Bitcoin. Maybe some of them got burned in the last few days or so. We'll get to that a little bit later on the Crypto Rundown today, of course. But wherever you listen to this show, keep those reviews coming. We do love to hear from you guys. Also, keep those questions coming. You guys are an important part of the show. We like to know what you guys are up to, what you guys want us to talk about. It always helps steer the ship, if you will. And let's see who's joining me on that hopefully not sinking ship today. We're going to steer clear of that iceberg if we can, to torture that metaphor even further. First, let's go out to the, usually I say sunny, and nay, perhaps even tropical. Now, dare I say it, snowy, deep heart of Texas, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com, by way of Carmen Line Capital. Mr. Meatball, A, welcome back to the program, and B, are the rumors true, sir? Did you bring Chicago weather to Austin?
Yeah, you know, it was funny. They said we got snow, and our neighbor that has lived here her whole life was like, I've never seen anything like this before. It had not snowed this much since, I think, the 90s. It was hilarious watching all these kids from Texas that had never actually really played in snow, hurling snowballs and building snowmen on an inch of accumulation. It was the most exciting thing that happened to them in years, and it was fun. So got all these little tiny snowmen that I'm walking by as I'm looking around outside.
Tiny snowmen, indeed. I'm also flashing back here to the quiet, the tranquil, perhaps snowy. We got a little bit of a dusting over the weekend here. Nothing like the Austin-sized snow they get down there these days. You know, Chicago, not really a snow haven, even though people think it is. But out in the hinterlands, maybe a different story. Let's go out to those hinterlands now. The hinterlands of St. Charles, we are joined once again by Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program. To you as well, sir.
Always great to be here. No snow today, but I officially had an old man moment over the weekend. We had a little bit of ice left on our driveway from the last snow, and the ice melted, and I was excited to have a 100% clear driveway. Old
man moment. Do you yell at a kid, say, get off my lawn, too? Is that the complete old man trifecta, sir?
I'm not quite there yet, but I'm getting there.
Hey, kid, shovel my driveway, then get off my lawn. How about that? There we go. Then you're on your way to true old manhood, as we are on our way into the trading block. Actually, how could I got ahead of myself. I have it all set up here, and I got ahead of myself talking all this snow in Austin. Flummoxed me, but we have to kick off our network in the proper way. Yes, it's 2021, listeners. You know what that means. We have to dive deep into the madness, the mayhem of the 80s once again. You know, we started this off, kind of get a way to get the blood pumping earlier in the week with some of those, action-y, rockin'-y tunes, but the 80s also had another side. That was the, dare I say, the cheesier side, the schmaltzier side. I think we're going to get some of that today. Let's see if you can play along and name that tune.
Sometimes the world looks perfect, nothing to rearrange. Sometimes you just get a feeling like you need some kind of change. No matter what the odds are this time, nothing's gonna stand in my way. This flame in my heart is like a long lost friend, fills every dark street a light at the end. Standing tall on the wings of my dream, rise and fall on the wings of my dream. Through the rain and thunder, the wind and haze, I'm bound for better days. My life, my dream, nothing gonna stop me now. My life, my dream, nothing gonna stop me now. Nothing gonna stop me now.
All right, now we're official. Now we can head right on into the trading block while everyone mulls over what song that is.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. An interesting one to kick off the week here. A lot going on in the world of crypto. We'll get to that a little bit later today. I got a feeling even if you're not a crypto head, you might be tuning in to that one either later today or perhaps later on the network. A little bit of movement, to put it mildly, out there in the crypto land. I think we jokingly, or maybe only half jokingly, titled our Vol Views episode last week, just buy Tesla and Bitcoin, because it looked pretty good. Now Tesla, or I should say Bitcoin, feeling a little bit of that weight over there. But we'll get to all that a little bit later today. Coming in today, the market's feeling a little bit of weight, even though a little bit less weight than they were earlier in the session. Seemed like they might, maybe, at least the Dow might break green a little bit. Right now, it's pretty much unched on the day. The S&P off about 0.2%, and the NASDAQ off about 0.5%, so leading the charge. To the downside, that means all of our vol products are mostly up to unched here from our last show. VIX up slightly, about a handle. It's about 23.5 coming into showtime. VVIX was at about 116.25, up about 4.5 points from last show. VXX, the product you guys love to fade, not really feeding the fade right now, kind of holding firm, holding steady from our last show, about 16.75, which puts it pretty much exactly unched from our last show. And VolQ, the newest addition to the vol landscape, at about 25.5. That's up about 1.5 points from our last show. All right, let's go back around the horn, the opposite of the way we came. Let's start back out in the hinterlands of St. Charles. Uncle Mike, as our reigning theme champion, first off, can you name that tune/show, sir?
I will guess Perfect Strangers.
What the? Okay, I know you're Shazam. How are you getting all these so quick? You're like a savant of 80s themes, sir. Airwolf. You pulled so many of these out of your... Where did you get Perfect Strangers from, sir?
Well, there's a reason why I became a 300-pound teenager. I just sat around and watched a lot of TV in the 80s, apparently.
Okay, I'll accept that. But yeah, Perfect Strangers. Well done. Knocked it out of the park on that.
Varian Balky.
Yes. I had no idea till I happened to see that theme setting it up today. That show was set in Chicago. I had no idea. They show him running to, like, the Wrigley Field. And I was like, I had no idea growing up that was a Chicago show. Here I am living in Chicago now. And it has much more... I'll have to go back and watch the entire oeuvre of Perfect Strangers now. I'll have much more resonance to me. But that said, I digress, sir. Aside from yet another bullseye for you on the theme game, we got to start keeping track so you can win a fabulous prize this year. What else is lighting up your tape on this not quite Uncle Mike type of day, sir?
Well, it kind of is from the standpoint that if you look at the futures last night, we were looking not too hot with S&P futures. And so I know also with Mark, we've talked about like sometimes if you're looking at the futures when it really doesn't matter if you have money in like SPY or something like that, and you're not going to trade anything anyway till the cash market opens. So I thought of something of what I'm going to start saying to myself if I find myself looking at the futures too much. I'm just going to say to myself, it doesn't matter what the futures say right now. So I'm going to start saying that to myself. So, Mark, that's my tip of how to have more balance in life when you're looking at your phone too much to see what the markets are doing at that point. But anyway, if you look at the open today, the bulls have been running pretty hard from the open of the market today. We're up actually probably like 25, 26 points in the SPX since the open, but we obviously gapped down. So we're still down 8 points on the day. And so I think one thing that we're finding is that the market doesn't seem to care if we have people storming the Capitol in Washington and we have things like that happening. It's proven that time and time again, but it's not going to care until the one time with which it does. So even though the market has not cared about recent events, I would still recommend heeding caution and not necessarily taking money off the table because I'm pretty not all in, but I'm pretty well into this market right now with my aggressive strategy. But I would definitely recommend having a plan in case it does go against you as to where you're getting out, what you're doing, and what you're going to do when the futures go against you. So just have a plan for that as we always would. With where we are going on the day today, I am curious to hear others' analysis on crypto with what's going on with that, but I'll save that for someone else who follows it a little bit more closely than I do. But I think that we're past the first week in the market, and right now the big news is Trump going to do something crazy in his last 9 days, and it doesn't look like he's going to, but you never know. So that's kind of one of the bigger bits of news that's happening. And what's very exciting to me is that come January 20th or 21st or after the inauguration, it might not be the very next day or the day after that, we're actually going to start talking about what's going to happen in markets right now and not so much macro things like what we've had to really talk about over the course of the last year. With COVID, we did have the United States did cross the 4,000 deaths per day mark a couple days ago. So that's the bad news, of course. But the good news is that it looks like so far the vaccine doesn't have too many ill side effects. We're still at that stage right now. And that's a good thing for our markets. And it looks like we're still, the markets are still trading on the hopes that the vaccine will really put to rest a lot of the COVID concerns. From everything that I can tell from the doctors with which I talk to, from people that are on the front lines, I try and keep in touch with a lot to help me make decisions, is that we're hoping that we'll be a little bit, we're never going to be totally back to normal. And by totally back to normal, meaning that we're always going to have this in our minds. But life as we know it will be a lot closer to what we know, hopefully in the summer at some stage. And that's kind of where we're at right now. It looks like the positive run of the market is based on that. So that's kind of what I'm seeing at this point. And the only other thing that I'm seeing is that we do have a little bit of an increase in volatility today, but I will leave that one to the greasy meatball to explain.
What you gonna do, Mean Gene, when the futures turn red on you? How's that, huh? That's what I was thinking.
That's not bad. That's not bad.
I'm not a 90s Attitude Era guy. The Rock, that's lost on me. But you give me some Hogan, I can sink my teeth into that. All right, have at it, Mr. Meatball.
Yeah, well, for starters, I knew Perfect Strangers as soon as I heard the harmonica. That was easy. Bronson Pinchot, who doesn't love them? I actually imagine my first trip at Chicago is going to be very similar to the opening of Perfect Strangers. I'm going to be I'm going to be coming on the boat on the Chicago River, all excited. I'll run by Wrigley Field. It'll be just like that. And I'll be standing tall with the wind beneath my wings. So, and I will rise. I will not fall. So with that, today is an interesting one. The Bitcoin Tesla complex is down. We saw a pretty decent backlash on Twitter, Facebook, Amazon on, really what looks like some political trading. Anytime we get these kind of knee jerks on politics, it typically is a fade. And we're seeing that out of a lot of these social media companies. They've already picked up a huge portion of what they gave away. Tesla, not as much, but Apple is going to be back over 130 today. Amazon stronger. I wouldn't be surprised to see Twitter back to unchanged or up, on the week by, who knows, tomorrow. A lot of activity on the 50 calls trading today, because as people bet, hey, you know what, this is just a knee-jerk type thing. And yeah, I think that the market as a whole has recovered. The theme from the last couple of years was, buy at night and sell on the open. And so far, the last couple of weeks, it's actually been the opposite. You want to sell at night and buy on the open, because we've seen all of our big sell-offs kind of reverse throughout the day and throughout the weeks, and the market has just gotten stronger and stronger as the days go by. Different theme song. That's Family Matters, right? Days go by. But hopefully I didn't ruin the song for next week. The market it just seems to get bought intraday. We still see other EV names moving. Tesla's down, but NIO is way up. And how about the move in the fuel cell energy stock for the last week? FCEL, Plug Power have exploded higher, which I think is really interesting. And the one thing that Mike brought up at the end is VIX. It's making a really strong move for what is turning into a fizzle of a sell-off. So, there's a lot of people doing a little bit of hedging in there and buying options on both S&P and on the NASDAQ and in the VIX itself that is driving things around. Volumes aren't insane, but it's definitely been the VIX is moving too hard for how little we're now down. So don't be surprised to see that get soft, if not today, then tomorrow.
There we go. Let's see what else. You mentioned volume kind of being soft. Let's check in on those numbers. Here, by the way, we have the numbers for the year for OCC. We'll have to get to those. I'm not sure if we'll have a chance to get to them today. We'll get to them on our next episode. Break down the crazy year that was out there from an options perspective in OCC. Spoiler alert, it was pretty much a record by just about any stretch of the imagination. But we'll crunch all those numbers for you probably on Thursday. All right, coming in here, 171,000 contracts on the tape here for VIX. So not an active day, but not a huge crazy day, not a huge quiet day either. ADV is 445, so it's pretty much right in line with what you would expect on a pretty much a decent day out there. SPY at about 2.1 million, the ADV 3.7 million, the S 699,000, the ADV 1.1 million out there, the Qs 642,000, the ADV 891 out there, and the small caps, at least through the lens of IWM, having a comparatively quiet day, only 285,000 contracts on the tape. The ADV is closing in on 700,000 contracts. Going out to the top 10 single names. What are you folks slinging out there? Actually, interesting. A little bit of a changing of the guard here at the top of our top 10. I'll give you a little bit of a teaser. I'll let you pick what you think. What could possibly contend with, nay, perhaps even topple the titans that are Tesla and Apple? Well, stay tuned. We'll find out. Number 10, Snap. Newcomer on the top 10. Haven't seen them in a little while popping their heads. Snap seems like it's kind of almost a bit of an afterthought. And everyone's talking, obviously, Twitter and Facebook, but also, your TikToks and others have really seemed to have usurped that cool kid throne with the tweens out there. No one's really talking a lot of Snap and the spectacles and all that stuff that was all the rage a few years ago. Seems to kind of have gone the way of the dodo, but they're good for number 10 on our top 10 here today. 227,000. Actually tied with number 9, Baba. Also at 227,000. The Jack Ma watch goes on. I'll have to find out if Mark has seen him. I know he was very concerned about having seen his face out there, so we'll have to check in with him for his Jack watch. Hashtag Jack watch. Number 8, Palantir, our old friend Palantir. 274,000 contracts, I say as I crack myself up. Number 7, NVIDIA. 299,000 contracts on the tape. Number 6, Facebook. 327,000. Number 5, AMD. 433,000 contracts. AMD's been kind of the little engine that could all year long from an options volume perspective. All these other names are just blowing the doors off. Most of them are big FANG names. Some of them are hot newcomers like your Palantirs and everything else. And then you have AMD managing to punch its way into the top 10 almost every day out there. It's kind of been a slow and steady, but doing a lot of paper. 433,000 contracts. That's nothing to sneeze at. That's AMD, number 5. Today. Number 4, Twitter, the aforementioned political trading going on out there. 453,000 contracts on the tape for Twitter after they're pushing back against some of these other accounts and folks are pushing back against them and a little bit of back and forth. It's another day that ends in Y here in the year of 2021. Apple, yes, I said Apple, number 3. 789,000. That's usually, they're just getting started at that level. That means number 2, you probably can figure out number 2 is Tesla, 821,000 contracts on the tape, as Mark alluded to. A rare day with Tesla in the red, off 5.5%. 48.5 handles as of right now. 831. Still, of course, the stock is up orders of magnitude. I think that the big short guy was talking about it today, saying how he's size short this one, which is, it's a rough road to be short this one for quite a while. I mean, if you want to do puts and do some limited risk, type option strategies, hey, go to town, have fun. If you're just straight up short in the stock, my God, then yeah, you're just throwing a lot of money away out there at this point because the folks don't seem to want to stop buying Tesla, except for today. But it's good for number 2, 821,000. That means number 1, yeah, you probably guessed it, it's NIO. 1.1, almost 1.2 million contracts on the tape for NIO out there. It's up about 7.5%. So it's having a good day. 63.25. I'm not sure if the news is out of. Oh, they unveiled a new sedan and a new powerful battery pack, and that's good enough to take the top spot here. Trump and Tesla and Apple. That's no mean feat out there. Speaking of no mean feat, I lied earlier. We do have the OCC numbers out here right now. Let's check in on them really quickly. Our friends over there, the Options Clearing Corp. Look at the year that was 2020, really briefly, because it was historic by any means. Remember I said back in September of last year, OCC had already surpassed the record year's worth of volume. That was 2018. Remember what happened in 2018? A lot. And they had already surpassed that by September. That should give you some sense of what the heck was going on out there last year. So we got the numbers now finally. OCC clearing 7.52 billion contracts. That's a ton of paper. That's not quite 2x. I think the previous record was somewhere around 5. So you're not talking 2x, but you're talking a good chunk. About 1.5x out there. And that's 7.47 billion options contracts. Remember, they clear a few other things over there at OCC as well. Yeah, the previous record was 2018, about 5.25 billion. So you're talking, wow, 2.25 billion more contracts. I mean, I said it before, I'll say it again. Be careful what you wish for sometimes when you want more options volume, because look what it took to get those numbers. But still, just stunning. And that's compared to the record of 2018. Compared to 2019, you're talking a 51% increase in volume, 52.5% increase in options contracts out there. December also It seemed like every month, starting in March, was really a new record for OCC. And sometimes they would take a break. Sometimes they'd be top 2, top 3 in all time. But almost every month was at least top 3 last year. And December was no different. December came in at, yet again, a new record, the highest, most active month in the history of the options business. 756.9 million contracts on the tape. That beats June, which was the previous top, at 693. That's a lot. That's a lot more. You're talking 60 million contracts, close to it over there. Just insane. Just how much paper is going up out there. ADV for 2020, 29.7. We're talking almost 30 million contracts a day. So that's up almost 51% from the previous year. So no matter how you cut it, it's just it's ridiculous. By the way, if you're wondering how much paper we had in 2019, it was about 4.98, just a tick under 5 billion for 2019, about 5.25 billion for 2018, and then dropping off quite a bit, 4.3 billion back in 2017. So compared to, let's go back to about 2016 actually was 4.17 billion. So you're not that far away from 2x here of the total volume of 2016. That's how active we're talking last year. So serious business out there, listeners. Now, we got some serious business to do because it is time to roll right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Right, new year, new time to kick off and unleash our Eye of Sauron. I always like when the Eye of Sauron fixes its gaze on something new, something different. We like the big names, we like the repeat offenders, those are all fun, but sometimes it's nice to have some new names coming across our radar, and I think our first two at least here are going to qualify for that. First, we have Vir Biotech Inc., ticker symbol VIR. Trading today, $28.38, up about half a buck or nearly 2%. And this chart, looking back over the past year, looks like pretty much a biotech chart. A year ago, it was trading 13.25, and then it actually gapped up when everything else was about to sell off in late February. This thing actually saw a rally all the way up to 60.20. It topped out actually on February 27th, so that's about a week after the rest of the market started selling off. So I'm assuming maybe there was an initial rush to these folks thinking maybe they had something to go with COVID out here, and then that was kind of short-lived because by the nadir of March, they traded down to $29.90, so they pretty much got cut in half there. Then they rallied up again. By March 17th, they were trading about $50 again. So, again, biotech, a little bit of vol out there. Then they gave it all up pretty much again. By April 3rd, they were trading $29 again. So, quite a few whipsaws there, up to 60 and down to 30 and back up to almost 60 again, then back down to about 30, all in the span of a couple of weeks. So, kind of the market as a whole just writ large and without the V-shaped end, instead of just kind of bouncing up and down and vacillating. Then they kind of languished in that level around the 30-odd bucks till about June. Then they started ticking up again June 24th this time, not June 8th, but June 24th they topped out at 47.86, and then they gave it all up again, down to about in the 30s again. And they started rallying again by July up to, looks like, about 52 they hit on July 21st, and they kind of hung around that level until August 21st, about a month, and then they sold off hard again down to 28. This thing's been all over the place. And then back up to, by October 13th, about $43, and then they gave it all up again. By November 9th, they're trading $25 again. So this thing has had numerous fits and starts over the course of the past year. And they started rallying a little bit again, got up to about $33 on December 15th, and then they gave that all up again to about 26.5 about a week ago, and now it looks like they're back on the upswing of that again. They got up to about 29.5 recently, and they're trading 28.5 right now. So are they due for, if this chart is to believe, are they due for another upswing, or is this just a lot of fits and starts signifying nothing out here? Let's see what our Eye of Sauron has found out here. It looks like it's a bit of a put palooza. In particular, it's the Feb 17.5 puts. That's an interesting strike. Those are very far out of the money. They're over 10 handles out of the money right now. We first spotted a block of 6,450 going up for 55 cents. The bid was 55 cents. They're 55 cents at a buck, so it seems like somebody was crushing it out there. We also saw another block of 4,300 going up a minute before that for 50 cents, also on the bid there. And let's see. And then we have a total coming into showtime. About 19,000 of these things have traded out there. So interesting stuff. Worth noting, the vol is ticking up a little bit on this strike between those prints out there, but still looks like they are crushing bid, unless someone just parked a bid and they're just taking pieces of it over and over again. But again, a total of nearly 19,000. These are Feb 17 half puts. Let's see, there is no earnings in this cycle. The next earnings announcement for this name is on March 25th. So Mr. Meatball, let's kick it off. A new name here on our odd block, which is always nice. Do you think someone is drawing an aggressive line in the sand on the 17 half strike, saying this far and no farther? I'll take my 50 odd cents about 18,000, 19,000 times to do that? Or you think maybe they're working a size bid and slowly but surely is getting whittled down there and they're actually buying these, sir?
No, I'm going to guess it's selling with the volatility with just thing moves. It sounds like you would not mind owning it below 17.5. So this makes some sense. This is definitely a mover and a shaker. So, a name that moves like this, you expect to see a lot of call action. These puts in particular are interesting.
These puts are quite interesting, so we'll come back to them. They'll be in our to-be-watched category. As we move on to another newcomer, this is Amex. No, not Amex, not the American Stock Exchange or the Amex card. No, this is Amex, A-M-X. This is short for America Mobile SAB Day CV. This is an ADR, obviously, here. This is out of Mexico here. This is a Mexican telecommunications ADR, ticker symbol AMX or Amex. Trading right now $14.90, off about 6 cents or so. Let's look at the sordid year that was Amex and see if it's anywhere near as turbulent as our previous newcomer there. Let's see, a year ago they were trading $15.98, so about $1 north of where they are right now. Not that much of a swing. They also rallied pretty hard before the Great Nadir. They topped out, it looks like, around $18, almost even, right in early February. Then we all know what happened later in February. It took a drubbing. It sold off down to, on April 17th actually was the low for this one. So they kept selling off throughout March. They got down to $10.12 in early April. So they got cut not quite in half, pretty close to it. And then they rallied up again. I bet you can guess when they topped out, listeners. The upper was June 8th, $14.71. Then they turned right around again. By August, they were trading $12 and change. And they kind of bounced around a little bit. Had a few spikes in that time, but nothing big. And they were still trading around $11.80 back in late October 29th, when they had a bit of a resurgence and they started trending back upward. They peaked up to November 10th. They were trading $14. By November 30th, they were trading about $15. And then they've kind of been bouncing in this 14 to 15 range for pretty much the better part of the last month or so. And that's right where we find them right now, $14.90. So let's see what this Mexican telecom has for us here today. Looks like we got a block of 5,000 of the Feb 16s. So a little bit out of the money calls here, going up for 24 cents. These were a little bit wider than our previous friend. Understandable, a little bit less vol here. We were talking 125 vol on those Vir Biotech puts versus 32.3 vol here on these Amex puts or calls here. So a little bit different vol landscape, hence a little bit different market. They were 15 cents at 25. Someone coming in, taking 5,000 these off the top here for 24 cents. There are earnings, and they actually are within this cycle. They are on February 9th, though these are not confirmed here, so maybe that date, take it with a bit of a grain of salt there, but probably something within the lifespan of these options. There will be an earnings announcement, so maybe adding a little bit to that juice. Mr. Meatball, while you're out there busy building snowmen in Austin, sir, you think someone's swinging for the fences here in everyone's favorite America Mobile SAB Day CV?
That's what it seems like, right? I think it almost certainly is a straight call buy. And, someone taking a swing at earnings, 20 cents, what was that? They bought 5,000? $10,000 to take a swing, and I don't, or $100,000. I'm sorry, to take a swing at potentially a big win. So makes sense to me. I think these are buy.
Makes sense. They do have an earnings probably within that cycle, so it makes sense. Tell you what, listeners, we'll come back to these as well. And you know what? Since we have so many in our catalog of trades to watch, listeners, We've been punting on this one for a while. Let's go back and pay it off now. Let's go back all the way to November 5th for what we termed back then an ANGI Homes Services call palooza. At the time, this was on the day of earnings for ANGI Home Services, ticker symbol ANGI, A-N-G-I. I'll tell you where they're trading now in a second. A little bit of a spoiler, even though these are Dees calls. What we profiled at the time was a 15,000 lot of the Dees 12 halves going up for 80 cents. At the time, the stock was $11.43. So these had a little bit of juice. This was a 77.5 vol at the time, listeners. We were kind of debating on the show whether they were sold. We parsed it out a little bit. Some of them were taken off in blocks. And then we started analyzing it subsequently to this trade, I should say. And it's like some of these calls, usually we've been profiling for a while, these big trades we talk about, no one really takes them off. They keep them on all the way through expiration, which, if you know anything about options, is somewhat aberrant behavior. This time, someone seemed like they were whittling away at this position. They put on 15,000 on earnings day of the 5th here, and they started whittling it away, small blocks, 2,000 to 3,000 here over the subsequent weeks. Of course, by the time expiration came around, there were still about 11,000 opening on the strike, and the stock was trading for $12. So at the time, those calls were effectively worthless. So we were kind of going back and forth on this at the time, and also at the time when we analyzed it. And it seems like if this guy bought these for 80 cents, which is a decent fill, but it is possible, then he pretty much threw $1 million down the drain. And if he sold them and he gritted his teeth, because it did flirt with that strike ever so briefly, then it looks like he perhaps put $1 million in his pocket. Mr. Meatball, are you feeling optimistic that our friend maybe walked away with $1 million, or are you feeling a little bit more rock lobstery and pessimistic that he threw $1 million away for naught, sir?
I forget whether we thought, so Andrew was on the show for these ones. I did not remember.
I think so. I think he was, yes.
I'm going to go, you know what, let's just say that this was a smart move and he made $1 million and be happy for him. You know?
Yes, let's ring the dinner bell. He made $1 million.
Let's be happy for this guy. Let's say he won.
Let's take the good news where we can. There we go. Take that, Mr. Rock Lobster, you diehard cynic, wherever you are in the Giovinazzi compound on the shores of Maine. There you go. Winner, winner, chicken dinner. It's open to interpretation, let's say, what this fellow was actually up to. A lot of nuance going up in that somewhat tight market. And we didn't see a lot of follow-up that was clear either way what this guy was up to. But he did take it off either way. So he probably had piecemeal bits here and there. But overall, it seems like $1 million, either in his favor or not. What do you guys think? Weigh in. But you know what that means, listeners? It's Monday. It is time for the first strategy block of 2021.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody. It is Monday. It is time for Uncle Mike to come on down from on high, stone tablets and options, wit, and or wisdom in hand. Uncle Mike, let me see if I can guess. Let me see if I can hazard a guess as to what you're going to talk about today. It's another tumultuous start to the year. Madness is afoot pretty much everywhere. So I think you're going to counsel all of our listeners to buy Bitcoin and Tesla. Is that correct, sir?
You've made me speechless with those words, Mark. I don't even know what to say to such things.
Yes, I'm correct. Thank you. Thank you very much.
So what I want to go through today is I've made a little bit of a tweak to my aggressive trading strategy for 2021, in that this is a strategy I've been doing for 15 years. And what I wanted to do this year is that no matter what you do in any type of strategy, there's going to be a vulnerability to it. So what I wanted to do is just kind of, and when you make an adjustment to the vulnerability, there's always a little bit of a give and take with what you make the adjustment to. So for years and years and years, ever since 2007, I have been of the school of thought. Well, actually, I made the rule in early 08. So I've had the rule that if the market goes negative on the year, the S&P 500, I go to cash, or at least 95% cash. I can occasionally maybe sell a little bit of premium or do something with a smaller amount of cash. But for the most part, I got to be in cash. So what the disadvantage of having such a rule in place is that if you are chopped out, meaning if the market's negative, it's positive, it's negative, it's positive, it's negative, it's positive, meaning if you have a year like 2015, which is what I had in 2015, and to some extent this past July, then you're vulnerable. And that strategy, it's not the strategy that I use. It's not going to, with that rule that I use, it's going to be tough because when you get in and you get out, if you have to do it very frequently, it makes it kind of tough. So what I decided to do this year is I decided to sell a short put spread, roughly, and I can't give the exact strike prices, but roughly 5% below where that number is. And so with that, does that make me a teeny premium seller? No, it does not, because of what I'm about to explain next. If you're going to do that for one day, then if you get a penny, then you're lucky, quite honestly. And then you're a teeny premium seller, and then it's going to work until it doesn't. And then the time it doesn't work, you're going to lose a heck of a lot more than the 36 trades in a row with which you made money on. So I didn't want to go that route. So what I decided to do is that I actually went out roughly 3 months with this short put spread. And so by doing that, it helps me in two ways. The first way is that if the market is choppy a little bit, all the rest of my strategies, the things that I talk about on this show, the shorter term things, the longer term things, I'll get out of course, but I'll be very nimble with them, of course, like I've always been, but I'll leave this short put spread on the table. The second thing that I want to explain with how this would actually work is that because I went 3 months out, let's say that the market does go down to that level. Let's say we have a 5% drop from the open of the year to those levels approximately where I'm at. Well, if that happens, then I'm still going to hold to my rule of whenever you're selling short spreads, rule number 1, never let it go in the money. Rule number 2, don't forget rule number 1. I'm going to follow that rule. However, if that happens and we touch the short strike price, then the loss that I take on that put spread is going to be much less than what it would be if it were a one-day option or a one-week option or a one-month option for those means. Because I went out 3 months, there is less gamma that's involved with this. So what I like about the strategy is that it's not very sexy, it's not very exciting. It can get very exciting, and if it does, it's a bad thing, but it's not very exciting because of the fact that it's not going to move that much when the market goes higher, but it's also not going to move that much when the market goes lower on the day. So I have that kind of in my back pocket to have something there to where if the market does go just a little bit negative on the year or a little bit positive on the year and just kind of hangs out there, then I have something in place as a way of selling some premium. So the moral to the story is that if you're trying to sell premium that's too near term, not against it, but you need to have an understanding that the gamma is going to really work against you if it goes against you, or for you if it's going for you. Meaning that if you sold a spread for 20 cents 4 months out and the market goes against you, then you might lose a nickel if it was 4 months out, but you're probably going to lose 25 cents if it's 1 day out. So by having it a little bit further out, the gamma risk is much less. So that's the tweak with which I'm adding for this year, in that I'll get out of a vast majority of the exposure that I have when the market goes negative on the year, should it go below the 373.88 mark, which is where SPY closed for 2020. I'll get out of a lot of my exposure, but I will leave that out of the money put spread on the table because it does not have a lot of gamma risk. It is something that I'm monitoring very closely. And then this way, if the market goes up, if it goes down, the other things with which I'm doing, if I get chopped, then I have that to kind of make up for it. But if the market does go straight down, I'm not going to get chopped because I'll already be out. I will have a little bit of risk on the table. And once again, I'm not going to let it go in the money. Now, there is always the risk of gap downs, but that is something that I monitor constantly as well. And that is the strategy block. First one of the new year.
Thank you for that, sir. Now let's see if we can squeeze on some of the folks, a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Let's get to it. Let's actually pay off a couple of recent polls we did with you folks here. First off, we asked you guys last week, very simple question. Kick off the new year. What are we going to see for this year? Are we going to see the major indices close higher or lower? Or are you guys already hunkering down in cash? And surprisingly, you guys usually fade these rallies, but of late, maybe it's just maybe this is a sign. Maybe this is the canary in the coal mine. The endless rally has broken even you. But either way, 65.5% saying higher. And again, given everything we've seen, it's hard to fault you. This rally does not want to be dissuaded. A lower 25.4%, and I'm already in cash at about 9% of you out there. By the way, Mr. Meatball, you said we should do a poll on crypto as well. We did that last week during our crypto rundown show. It's more of a quick flash poll out there, but we also asked our folks out there, has the recent explosion in Bitcoin and ETH made you more interested in trading cryptocurrencies? Obviously, this is a week ago, so this is before the big sell-off, but in the middle of the mad rally in both Bitcoin and ETH, and our audience a little bit more split on that. 44% saying yes, 40% saying no, and 16% choosing the Uncle Mike route, or I guess if you believe it, the British regulator route, saying these things are a fad. Mr. Meatball, either of those surprise you? Have any thoughts? A, our audience being decidedly bullish for the year that is 2021, and then B, still a little bit split on all things crypto, sir.
Yeah, I am a little bit surprised, but I expect them to be more bearish, and they weren't.
And what about not exactly committing to crypto yet, sir?
Well, I mean, that makes sense. This is an audience that, the pessimists hate crypto, so it makes sense.
Or as you referred to it earlier, the Tesla Bitcoin complex.
Yes, the Tesla Bitcoin complex.
That's a good pairs trade. Tesla and Bitcoin. I think you have a question about pairs trades a little bit later. Maybe we'll get to that. All right. Mr. Uncle Mike, before we get to that, any thoughts? A, are you surprised that maybe you've infected our audience? 65% of them in the bullish camp, so maybe you're starting to get through to them. And then B, are you also, or perhaps not surprised that our audience is pretty much split still on crypto, sir?
Not surprised in the split on crypto, because that's kind of like religion, politics, Apple, and precious metals. You're on one side or the other a lot of times. In terms of the market, I think that we have an intelligent audience, so that's why we have so many bulls.
All right. We bump you folks in the live chat up to the top of the list. So all you after-the-fact listeners, you have to wait a little bit. My boy Luigi's in there again. Good New Year to you there, Mr. Luigi. He says, forgive me, but I listened to another network. Oh, that's it. You're dead to me. You can only listen to the Options Insider. We'll forgive you this one small digression there. Let's see. He says, they talked about pairs trades in futures. Is it all that and a bag of chips? Or is the 3 Delta put in SPY the same thing? Or a position in metals the same? Oh, we were just talking about pairs trades. Very timely. Here, typically a pairs trade, you're going to be buying one and selling the other. Listeners, usually you're looking for some sort of divergence between the two, or perhaps a convergence, depending on the way you put on the trade. So I don't know exactly what futures you're talking about here. Maybe are you talking about a metals versus the S&P? Are you talking about different months within the S&P? There's a lot of different ways you can be S&P versus NASDAQ. You can do a lot of different things with pairs trades out there. But in general, is it, I guess you're saying as a hedging strategy, the pairs trade? I'm not that excited about it. We talked about it before. Something that's more, in fact, look at last year. Go check out some of the TWIFO episodes we did. We just did one for the 2020 year in review. We broke down all the correlation for all those different assets across the entirety of the insane year that was 2020. Look at those numbers and tell me if you want a position in metals as your hedge. Net on the year, if you have held on, it kind of worked out. But on those moments when you really need the hedge, when you really want to have that, hey, I'm diversified portion of your portfolio, like, I don't know, maybe March, certainly a big one, or any of the other big sell-offs we saw throughout the year, metals didn't really do it for you. That old saw of correlation goes to 1. Yeah, they all did. Bitcoin sold off hard, 30-odd% intraday, back at the height of the madness. So these other asset classes that used to count as diversification, not really doing their job. That's why if you have a put, in fact, Matt has said it on our Advisors Options show, and it's kind of hard to argue with them. Maybe they should be their own asset class these days, puts, because it's the only real, reliable, true, contractually specified inverse correlation that you could rely on. You know, you got a delta, you know what you're going to get, you got your strike, you got your time to expiration. You buy a put, and I'm not saying if you go out and just load up on puts and spend all this money on them, but if you buy a put, you do know what you have, and that's at least something you can rely on, where these other correlations, when you really need them, not really there. Mr. Meatball, what are your thoughts here on pairs trading in futures? Or do you prefer, as he puts it, a 3 delta put in SPY?
Pairs trading in futures or a 3 delta put in SPY. I mean, I definitely have done some pairs trading using options between like the Dow and the S&P or the NASDAQ and the S&P. So, if you're doing dispersion trading or correlation trading, I think it makes a ton of sense. So, I'm all for it. I don't know. I didn't quite get my head around the 3 delta put in SPY.
Yeah, I don't really know either. I think he's talking about it as a hedging type strategy as opposed to like dispersion.
Yeah. I mean, sure. That's a fine, inexpensive hedge if that's what you're trying to go for. But no, I don't see that quite as related as the pairs trading. Pairs trading can be, if you've got a strategy, really effective. So I'm all for it.
Yeah, depending on the scenario, just maybe not in the ones we just outlined. Mr. Uncle Mike, as our resident permabull, what do you think about pairs trading in futures? Is it all that and a bag of chips, or is a 3 delta put in SPY the same thing, or a position in metals the same?
Position in metals is definitely not the same thing. You already said everything I think that there is to say on that. But ultimately, if you are going to pairs trade, what oftentimes people do is you'll put something into something a little bit more safe, like the bonds, and then put your riskier assets in stocks. But in reality, you're not going to quite get exact correlation. It's just that you're looking to diversify a little bit. So a traditional pairs trade, like buy calls on Home Depot, buy puts on Lowe's because you think Home Depot is going to outperform Lowe's, I think that's a trading strategy. I've never been much of a pairs kind of guy, but it does exist. But ultimately, I think that if you're looking for a pairs to diversify you, then or to kind of get rid of risk, I don't think it's a good idea. I think puts are the only thing that's going to get rid of risk. But if you're looking for it as a way of diversification, then I think it's okay. So in terms of the 3 delta put on SPY, I guess it depends on how many deltas you have long SPY. So that's where I'm at.
3 delta not gonna get you a lot of bang for your buck here. As we keep on rolling into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, time to go around the block. Let's look really quickly. We didn't get a chance to talk about it earlier in the show, but there are earnings coming back. So if you'd like to focus on something specific, we got you covered here, theoptionsinsider.com. Click on the Options News and Articles tab, hot off the presses. Our latest earnings reports coming up for you here as of this morning. We've got KB Homes. They're popping off tomorrow after the bell. They were pricing in, they're trading $33. They're pricing in $2.22. In the past, they moved to $1.92. So a little bit extra juice in KB Homes. Delta Airlines, they are popping off on the 14th. They're pricing exactly $40 going into this event in terms of where their stock was trading. And they were pricing in on their earnings straddle, $1.76. In the past, they've moved 96 cents. So a little bit extra juice in Delta. 2 for 2 here so far. Citi, 65.37. As of this report, they were pricing in 231. In the past, they moved to $1.58. So 3 for 3. Interesting. JP Morgan, 136, pretty much even coming into this report. They were pricing in $3.71. In the past, they moved 244, so 4 for 4. Let's see if we can make it 5 for 5. PNC Bank, also on the 15th, 158.19 is where they were trading. They're pricing in $5.41. In the past, they've moved $3.97. Interesting. Perhaps a bit of a trend in the fan. Let's see if we can make it 6 for 6. Let's go to Wells Fargo as well. They're on the 15th as well. They were trading $33.19. They're pricing in $136. In the past, they moved 98 cents. Wow. 6 for 6. Dare I say, perhaps a bit of a trend here, a little bit of juice, at least on the financials out there. Throw KB Homes and Delta Airlines in there as well. But yeah, it's a pretty broad cross-section. 4 financials and then an airline and a home builder. And all a little bit extra juice. Interesting stuff. Let's go back around the horn and see what everyone else is watching. Let's start with the snowiest of meatballs. Mr. Meatball, sir, what do you keep an eye on for the rest of this week until we can gather here together again on Thursday?
Yeah, I want to see what happens with Tesla and Bitcoin. The banks, I think, are really interesting. EV power, I'm watching energy. Energy continues to perform really well. And that's kind of the things on my radar.
Mr. Uncle Mike, same question for you, sir. What do you keep an eye on for the rest of this week?
Definitely in agreement with Mark on energy. Energy has been quite the performer. Just looking at XLE, it's heading back. It's above the 40 mark again, on its way up higher. So definitely keeping an eye on that. Banks, what I like about XLF right now, I got some out of the money short puts that are pretty far out of the money that you're able to do with it. That they're at levels that I would be more than happy to take delivery on. And then 3,800 on the SPX. Are we going to hold that today? I think that's something that's a pretty key number at this point because it's the nearest round number that we have now that we're near all-time highs again. So watching those things and, making sure the world doesn't end on Washington in the next 10 days.
Yes, and that as well. Unfortunately, listeners, that music means we're coming up against it here for another episode of the old OB. But before we go, let's go back around the horn, see what each of our listeners, or I should say each of our contributors has in store for us here on the old program. Let's start in the land of snow and ice, known as Austin. Mr. Meatball, sir, while you're scraping, do you even have a snow scraper down? You probably throw all that stuff away. And then B, what should folks look forward to from the land of the pit, sir?
Yeah, I was the only one on my block that had a snow brush for a car.
You probably were. You should have rented it out. Big bucks.
I know. I walked around and they were like, "What is a snow brush? Is that for like building a snowman?" I went, "No, it's not." But I am doing a webinar with our resident DC insider, Frank Gregory, tomorrow. If you're on my email list, you'll get an invite. We're going to go through the last week's events and talk about what opportunities it's created, and that will be an absolute blast. So make sure you join that one when you get the invite, folks.
There you go. Check it out. He survived the DC kerfuffle last week, so that's at least a feather in his cap. Learn more. OptionPit.com is the place to go. Mr. Uncle Mike, sir, if folks want someone to help them through these troubled times, where should they go? What should they do?
stcharleswealth.com if you're looking for a financial advisor who uses the option product.
There you go. Nice and succinct. stcharleswealth.com. Remember, listeners, if you're listening live, we got crypto coming up in exactly an hour. Going to be a fun one. Probably want to stay tuned for that. Listening after the fact. Just hit next on your device of choice, and you can get it in your hot little hands. And, of course, we'll be back tomorrow with more fun content for you, interviews, all sorts of fun stuff. Education Wednesday. On Wednesday, got OPR, and we got boot camp coming up. Thursday, of course, we're back again for another episode of The Option Block.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.